Thank you for that, for your time, Ifeoma. And let's first get into your thinking around what we've seen play out in terms of liquidity in the market, and before we get into how the market's wrapped up this week.
Thank you, Kenneth, for having me. So this week in the market, it was very, very illiquid. That was because of the bond auction, which took place on Monday. And the auction was very, very well oversubscribed. From the beginning of this year, this is the highest that we've seen the number of successful bids. Number of successful bids was 238 compared with 165 at the last auction. And we also saw the DMO taking advantage of this oversubscription to oversell. So they offered 150 billion, split equally between the 2026 and the 2042 bond. And they sold 296 for competitive bids and 640 million for non-competitive bids. This also spilled onto the stop rates. We saw stop rates decline. It declined to 10.15 on the 2026 from 10.95, and also declined to 12.7 on the 2042 from 13% levels. So because of all these settlements, the system was very illiquid. So we saw little to no activity. And that also caused the CBN not to carry out their regular CRR debit today, because we're expecting FAC allocation payments. We just came in, early this morning. So the incoming FAC allocation payments will also spill into next week. We're also expecting maturities from 2035 and the 2050 bond coupons, which will come in on Monday, and we also have T-bills maturities of 143 billion coming in on Thursday. So next week is expected to be more liquid than this week, and that will cause bullish reactions in the markets.
But then in terms of the yields, though, what's your outlook?
The outlook for yields, we expect to see some decline. In the money market, yields were at high single-digit to double-digit levels because of the illiquidity in the market. But next week, as liquidity comes in, we expect a decline in yields.
Yeah, but looking at how the first quarter panned out, though, for institutional investors looking into the market, though, how do you advise that they gauge the next quarter?
People would still be on the lookout to buy. For now, yields are attractive until Q2 begins to come to an end, because that will be the time where the federal government will start implementing more of the capex part of the budget. So we'll see less attractiveness of bond yields. But for now, yields are very attractive. So institutional investors, pension funds, market players will still continue to invest heavily.
All right, so we saw the MPC hold rates at its last meeting. Do you agree with the sentiments expressed, or do you think it's time we could have started on the line of a possible hike?
Yeah, we saw. Yes, market expected rates to be put on hold, but then we've seen several committee members recommend a rate hike, and also across the globe, we've seen rate hikes in the US and rate hikes in some other African countries. So it's not unlikely that at the next MPC meeting, we might see a possible rate in MPC rates.
But looking at the currency, though, and how we've seen it pan out, though, what's your outlook for that going into the next quarter?
I think the CBN has done a very fantastic job, intervening in the markets and making sure the currency is stable. So I believe that will continue to be the case going forward.
And in the area of the figures we saw from capital importation, how does that interpret for you?
Well, it's looking good, and the federal government has said they are going to do all in their power to make sure that they keep the economy afloat and support the private sector in however ways they can.
Okay, but quite a lot happening there. But going into next week, what's that one thing that you're looking out for that excites you about the market going into next week?
Well, we'll have more opportunity to buy in the market. Like I said, a very liquid market is a very good thing. So we are excited. We have a very liquid market, because this week was very tight in the market, and that made it difficult for trading. Well, going into next week, we'll see a more active market.
Right, but in the T-bill space, though, and also the special bills, what's your outlook?
Well, special bills, people have really used it to manage their funding gaps. We've seen market players, especially since this week was very tight, so we've seen some sell down, some OTC transactions in the market. So yes, but that hasn't been very active at the end of this week. But at the beginning of the week, we saw some trading in that space.
But like I was trying to get your outlook for the currency earlier, and more or less what you think, especially play out in the parallel market space?
Well, like I said, you know, we're continuing to see interventions, and I don't think that will change going forward.